Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
So we're going to do a video today based on a user comment, which is what would happen in real estate if we switched from an income tax to a national sales tax. As some of you know, national sales tax is something that was recently proposed. Not likely to pass, but it would definitely have an effect on real estate if we did it. So one is first really quick. So I'm the economics guy. My master's degree is in business and economics. And your degree is in political science.
Right.
So you sort of understand the thing. So what's the difference between income tax and national sales tax? And then we'll talk about real estate.
Okay. So income tax, you're taxed on your income. Sales tax, you're taxed on what you're consuming, right? What you're purchasing.
Okay.
And on income tax, we have this kind of control in place, if you will, because people only above a certain income are paying income tax. Everybody else is not. But on a sales tax, it doesn't matter what your income is, because when you go to the store, and you buy socks, everybody pays the same sales tax on those socks, right?
Right.
So the issue with it is that it's regressive. That means that it hurts people on the margins, like poor people and people on fixed incomes. These people can least afford that sort of thing, and that's problematic. Now, the argument can be made that those people can be subsidized, meaning that they would simply get a stipend from the government, every month to help offset that sales tax. So that is an argument. However, it is still hurting the people on the margins.
Yeah, because people that make 40, 50,000 and below, for the fact, don't really pay any tax. They don't pay any federal. They don't pay any income taxes, but they would definitely be paying these taxes, right?
Right. So let's say that that you're somebody who makes maybe $80,000. So now you're somebody who right now technically pays income tax, but because you have 6 kids, by the time you write them off, you get a tax refund.
Yeah.
With this program, with a sales tax, maybe you wouldn't get any sort of help from the government because you don't meet that income threshold, even though you have 6 kids.
And you're probably consuming more. So it would punish people with lots of kids.
Right.
Okay.
Lots of socks to buy.
Okay, so we'll talk about this fair tax plan. This is an article, Pros, Cons, and Effects, that just recently came out. So the fair tax plan is a sales tax proposal that would replace the current U.S. income tax structure, would abolish all federal, personal, and corporate income taxes, as well as the alternative minimum tax. It would end taxes on gifts, estates, and capital gains, Social Security, Medicare, and self-employment. The plan will replace all these taxes with a federal retail sales tax of 23% to be administered by state sales tax authorities. So states would collect it, give it to the federal government. It was first introduced to Congress in 1999. Has been reintroduced several times over the years. So let's talk about tell them about right now, how real estate is affected by the income tax. What benefits, or how does real estate and income tax all work? Do we get tax breaks or what?
Right. So if you are a homeowner, you get to deduct your property taxes, providing that they're not exorbitant, as they are in like 2 states. But everybody else pretty much gets to deduct all their property taxes.
Okay.
You get to deduct your mortgage interest. So technically, the federal government is subsidizing your mortgage payment. So those are all good things. And when you sell the house, the first $250,000 if you're single, or the first $500,000 of profit if you're married, is tax-free.
If you live in it.
If you live in it. If it's your primary residence, then it's tax-free. So those are all really good tax benefits. Real estate has been the number one wealth building tool for Americans from day one. So a lot of the tax policies in place have been used to incentivize the behavior of home ownership, right? They've incentivized us to purchase homes. So if you have a sales tax and you don't have the write-offs, then that might change things. What would the sales tax look like if you had to pay sales tax on a home?
Well, let's talk about that. So Brookings Institute did an article. I don't have the date in here, but this is not a recent article. This is surprisingly from a long time ago. But it says don't buy the sales tax. Brookings Institute is a policy organization. They've been against this national sales tax for a long time. So the original proposal that they were talking about was actually back in the 90s when this whole thing first came up. And it says the sale of newly constructed single-family homes would be taxed. So new construction taxed, as would improvements. So to existing home. So if you had $50,000 worth of repairs because you added a new thing on, you remodeled your house, you would have to pay a sales tax on that. And then the proposal at the time was already existing owner-occupied housing would be exempted. So let's take that in two separate things, okay? Let's first talk about, let's say that this is the plan that actually happens. If we do this, which is very unlikely, right? We don't think this is going to happen. New homes are taxed. So there's an excess burden of the tax. And we'll just say it's not 23%, but we'll pick a number, we'll say it's 10% more. So that $600,000 house, you have to pay $660 on. So what does that do to this? You have this thing called excess burden of the tax, right? So how does that affect the home builder and then the person buying the house?
Well, so home builders don't necessarily work with a lot of margins to begin with.
Okay.
So this would negatively impact them. And so they would maybe build less. We're already shy on how many homes that we have. So that would hurt. That would hurt the number of homes available for people to purchase. And of course, the less homes they build, the less people they are employing. And the less people they are employing, the less people in the support businesses all around that are employed. So it's it has very negative effect for communities. So that's not a good thing. Okay. The other thing that happens is now you're driving people into resale because that 10% tax for a new home, if I don't have to pay it on a resale home, now you're driving people into resale. And that's spiking.
So you're screwing with demand artificially.
Right.
And isn't this bad? Because if government does it, let's say this happens, and government says, oh, it's going to be super tax negative to go buy that new home. Come in the resale market, builders are going to, because of market economics, are going to say, hey, we'll just build less houses. How does that affect the housing shortage?
Well, so like I said before, if they're building less houses, we're already over 1 million homes short. We're going to be even more short than that. Okay.
But does this then let's say you own a home already, January 1st rolls out, and all of a sudden you realize that you're not going to pay that capital gains tax on your investment properties. And you're like, woohoo, and you decide to liquidate them all and just pocket all the cash now.
Yep, bring
it's
it
a
on.
huge windfall.
It is.
Maybe.
I think one of the things that builders, because like you always say, the market's very efficient. So if builders are put in the position saying, hey, if I sell you the house, if I sell you a brand new house, it's a 10% tax. But if I hang on to that house, rent it out, and now it's a used house, haha, it's no longer a new house, and then I sell it to you a year later, then it's
maybe. I don't know if they would allow that. I think.
Well, but look. The market's very efficient, like you say. People will find a way.
And they may do it. They may say, hey, if the builder has owned it for 2 years, after completion, they can call it existing and avoid the tax. And then all new homes would just go to renters.
Well,
that's what the market would do.
Right. So either all new homes would go to renters, or the builder would go ahead and rent it to you, and then would sell it to you in 2 years. So
lease options would explode.
That's
okay.
Right.
Let's talk about this other scenario. The government, because they've never missed a chance to grab opportunity or grab revenue, says, hey, we've just realized that we actually need to make it on all home transactions, because that's what people are concerned about. All home transactions, you sell a house, you buy a house, we're going to charge this extra 10% on the thing. So you've got a house, it's $400,000, that's the market value. That's already costed in realtors' fees and existing taxes. And now you're told, well, you're going to have to give us $10,000 of your, or you're going to have to give us $40,000 of your $400,000 when you get net proceeds. And you go, first of all, you may not be able to. You may say, well, I don't have that much net proceeds. So maybe they just tax net proceeds. But let's say it's free and clear, and you go, I'm not going to give you $40,000. I'll just raise the price of the house.
Well, so two things. One, I can't imagine that they would tax net proceeds because, then nobody would pay off their mortgage, right? So I don't think that they would.
You would keep refining the hell out of it and pulling cash out, refi. Then when you sold it, say I didn't make any money, but you pulled all the money out on refis.
Interest-only loans would just spike beyond belief.
Can you imagine that? You just pull the equity out, and then when you sell it, I didn't make any money.
Right.
I bought it for $400,000. I sold it for $1 million. I took $600,000 out in loans. that you get paid off when you sell the house, but you've got the money in your bank account
That's right.
already. You pay off the loan with the proceeds, but you have the money.
Right.
Okay.
So I think the way they would do it is they would do it off the base price.
So the buyer's paying it.
So right. So if you paid $500 for the house and you sold it for $600, you would pay taxes on that $100,000, and the taxes that you would pay. But see, I don't think they would do that either, because remember that there is no income tax. If there's only sales tax, then you would just pay it on whatever that sale price was, because we no longer have the IRS under this model.
Right. There would be no way to reconcile this.
Right.
That's the whole point of the sales taxes.
Right.
You would the IRS would go away. There wouldn't be a federal thing, because the states would physically send the money. So, but let's talk about this too. There are people out there who say, no, but because now I'm taking home more cash, I have more money to go buy a house. But the market's really efficient. So all of a sudden, with more dollars chasing housing, home prices would go up too.
Right.
And the people would, of course, be raising their prices
to cover the tax.
cover the tax.
Right. So what happens is that first-time buyer, he's having to pay 10% more for the house so they can cover your tax. And then when he goes to try to buy his move-up house, now he's going to have to get 10% more for his house so that he can buy the other house, and then he's going to pay 10% more for the other house because he's got to cover that seller's tax. So the whole thing is a mess. It causes prices to artificially increase.
Okay.
And housing is a huge part of our economy. So all these prices going up really cause inflation to spike. That hurts everybody because, like we said before, everybody has to buy socks, right? And inflation just hurts particularly the people at the bottom of our economy that are either on fixed income or are poor, and that's really very difficult. I think that the increase in interest rates is nothing compared to what taxing, doing a national sales tax, and particularly any kind of sales tax that is against real estate would do to the economy regarding inflation.
But just keep this in mind. If you think about how a couple percent change in interest rate affected total numbers of sales, we're not talking about prices going up or down, we're talking about total numbers of sales. You tack on a 10% tax, the number of sales are going to plummet.
Right.
And the number of sales plummet, you're going to have a lot people not doing loans, people not doing real estate, people not doing home inspections, people not doing all these things that are in title and escrow, and all the other ancillary services are involved in real estate. And then you're going to have less people wanting to sell too. Right. You're going to have and then the people that are buying potentially are going to be chasing less homes out there. So you get this sort of funky disequilibrium that ends up settling out. But my opinion is it settles out in a place nobody wants to be. You have fewer choices, and the choices you have to make are for more expensive homes because you're paying the excess burden of the tax on the home.
And the inflation is throughout the economy, because if you have less people wanting to sell their house because of the tax, you have less people obviously being able to buy homes, which means that they're driven into rental homes, which means that there's putting artificial demand on rentals. Rent prices go up, supply and demand. So you're getting in this nasty spiral of inflation that is very difficult to get under control, as Chairman Powell is finding out.
Okay, the government has done a good job incentivizing people to purchase real estate. Real estate has been a key part of the U.S. economy, the way through tax law. So I think that anything that negatively affects real estate is ultimately bad. It's bad for all the people that watch your channel. It doesn't matter whether you're selling or you're buying. Any increased taxes on specifically your thing is going to be worse for you, I think. So ultimately, what I believe sort of is the current system's fine. It's not great. It obviously has a lot of loopholes in it. I'm a bit of an advocate for more of a flat tax.
I am a huge advocate for a flat tax, but that's another video.
Okay. But especially for real estate, I think this would create winners and losers. It would cost everybody more. People who already own a bunch of existing investment properties, when they liquidate them because they don't pay income taxes, would basically get to skate potentially on those gains. They would pass on all of the sales taxes to the next person. I think they would, and they would just walk off with a ton of cash. And then I think people who are struggling or lower income trying to buy, I think would make it put real estate out of reach for a lot of people.
Right. And the reason that sellers do not pass on their their tax burden when they sell the house now is because, like I said at the beginning, owner occupants get $250 for a single person, $500,000 for a married couple of gains without tax, and investors get to 1031 exchange, which means that they get to defer the tax. And so that tax is really not affecting a lot of people when they're doing real estate transactions right now.
Well, it's baked in already. The tax we pay is currently baked into prices.
It is.
So this new tax would get baked in. But remember what Wanda said, everyone doesn't pay that 15%. Mm. Most people buying and selling houses aren't investors.
Right.
But it's actually a small percentage of homes that are investor owned. Most homes are owner occupant. Most of those houses are not paying taxes when they sell.
Right.
They're not paying. So if everyone is then now forced to pay a 10% tax on the end, it's going to get pretty darn hard to buy a house.
Mm-hmm. It is. And we are pro people owning their homes. And so that's why we care about this subject. If this was interesting to you, please leave us comments. Tell us what you think. And please subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.